सागर और अनुज वेंट फॉर राफ्टिंग टू ऋषिकेश। सागर ने लाइफ जैकेट, हेलमेट सब पहना, पर अनुज ने ट्रेनर की काफी बार बोलने पर भी दोनों चीजें उतार दी। किस लिए? अच्छी फोटो के लिए। थोड़ी ही दूर चलने पर बहुत तेज वेव्स आई और बोट पलट गई। सागर तो अपने लाइफ जैकेट और हेलमेट की वजह से ठीक था, बट अनुज को हाथ में काफी चोट आई। बड़े बुजुर्ग इसीलिए ही कहते हैं, सावधानी हटी और दुर्घटना घटी। इसे हम ये समझ आया that we should always be safe than sorry. Be secured against any uncertainty that might happen in future. This rule is applicable to your financial investment journey as well. Hello everyone, my name is Anish, and in this video we will be talking about everything to do with term insurance, but most importantly how beneficial it can be for you and your loved ones. But before that, don't forget to subscribe to our channel for more amazing finance content. So guys, the first step in your investment journey should ideally be to reduce your financial risk in the future. That is, ideally before you go for stocks, mutual funds, cryptocurrencies or other finance products, you must start with insurance. This is because it protects you and your family in times of crisis and can keep you financially stable. In this video, we are going to talk about one of the most crucial types of insurance, that is term insurance. What exactly is term insurance? How does it work? What is the adequate coverage? Well, आपके पास ऐसे बहुत सारे सवाल होंगे और इन सवालों के जवाब मेरे पास है. In this video, I'll give you a simple and brief overview of term insurance and its various benefits. I'll also cover minor topics such as riders and add-ons and give you a comprehensive understanding of why term insurance is important for you and your family. So, without any further ado, let's jump right into it. Term insurance एक बैकअप प्लान की तरह है. If something unfortunate happens, then you or your family must have some financial backup that can be used to regain some stability. But how? Well, let me explain. Simply put, in term insurance, you pay a fixed premium for 10, 20, 30 years or more. During this term, if the insured unfortunately passes away, then their nominee will get the pre-decided benefit from the insurance company. However, if the person insured doesn't pass away and the term ends, then the nominee will not receive any payout. Let me give you a simple example. Rahul, नाम तो सुना होगा, is a 25-year-old male who is the sole breadwinner in his family. मतलब राहुल के इनकम से उसका घर चलता है. With this income, he supports his parents, pays electricity bills, rent, maintenance, etc. Now, without his income, the family will not be able to survive. As a result, he must have a life insurance for a term of say 20 years. This way, if he passes away during this term, his parents will be able to get some form of financial coverage to survive. If he doesn't pass away during this term, there will be no coverage. With this, we understand that term insurance or life insurance is for anyone who's either the sole breadwinner of the family or contributes to the household expenses in any way. Thus, tomorrow, due to some unforeseen circumstances, if the person is unable to contribute to the family's expenses, the family can be covered. Now that you know what term insurance is and who needs it, let's understand adequate coverage. How much life insurance coverage is enough? How much money is enough money? Well, at face value, the coverage offered might be a lot, but does it truly suffice your needs? And is this enough for your family? Well, there are ways to calculate the same. First, understand what are all the different things you need the coverage for. A few of the common items on this list are 1. Loans and other debt. 2. Replacement of income. 3. Supporting your family members. These are the three major purposes of life insurance. Now that you have these, you can calculate the adequate coverage. Generally, most financial experts say that 10 times your current annual income is a reasonable amount of coverage. While this is a theoretical calculation, in reality, you'll need the insurance amount to cover all your debts, including your mortgage, support your family members, and ensure your child and their needs are taken care of until the age of 18. When you factor all these things, your calculations might change slightly. One way is to multiply the current income by the number of years left for retirement. Remember Rahul? He's currently 25 years old and let's say he'll retire at the age of 65. This means that he can work for the next 40 years. Let's say he currently makes 5 lakhs a year. So his insurance coverage can be calculated as 5 lakh into 40, which equals to 2 crore rupees. But this isn't the only way to calculate adequate coverage. Rahul can also calculate how much money is required for his family to have the same standard of living even after he passes away. Rahul must multiply that amount by 20 and take an additional 5% to factor in the inflation. The resultant amount will be adequate coverage. These are the two ways in which you can calculate adequate coverage, but they are not the only ones. In fact, you can calculate the amount required for each of the factors mentioned above and then decide which method suits you the best. If you thought that was all to life insurance, तो रुक जाओ. Picture अभी बाकी है मेरे दोस्त. There's something called riders and add-ons. With these, you can elevate the benefits you receive from the life insurance. Besides these, you can also include add-ons that take care of critical illnesses and disabilities. This way, if you are unable to work due to some critical illness or disability, the insurance will cover your medical expenses and help you with supporting your family and their expenses as well. These riders are small but significant part of the term insurance policies that you choose. Chalo, we've understood what term insurance is, who needs it, what's adequate coverage, what riders are, and perhaps a little more. But what are the benefits? Well, what you seek lies right before you. Nahi samjhe? Let me help. Below are the top benefits of term insurance. Life insurance reduces the financial risk of your family when you pass away. If you pay an insurance premium, that amount will be exempted from being taxed under Section 80C of the Income Tax Act 1961, which is up to 1,50,000. Also, the amount received to your family at the time of maturity is also tax-free under Section 1010D. With term insurance, you can also get your medical expenses covered if you choose riders that take care of critical illnesses and disabilities. Overall, term insurance is like that safety net that protects you and lets you sleep at night because you know that tomorrow morning, if something unfortunate happens to you, your family will be taken care of. And voila, we have come to the end of the video. Now that you know about life insurance and its benefits, what are you waiting for? Do your research and get one for yourself and your family. If you found this video to be valuable, subscribe to the channel for more such content. Also, in the comment section below, do let us know which topic you would want us to cover next. We'll be back with some good finance tips and hacks that can help you grow your wealth. Until then, stay safe and invest smartly.